So thank you very much for coming on that sharp welfare. So now we are going to start the long run. Okay, finish the discussion on short run first. So we will discuss now how the cost curves behave in long run. Okay, so this is the most favorite session. So after lunch, learning economics, I know, would be very difficult, but the problem is I won't be able to take the classes after the October. So that's why we are going to cover as much as we can at the beginning. So I requested if possible, this will be 2 stars at the beginning so that I can at least cover all the lectures by myself. Okay, so that's all. Right. So the cost of production long run. Now we are going to talk about long run cost curves, and remember I told you some concept, economies of scale. We are going to learn that here as well. Then we are going to learn how these firms try to maximize the profit in the long run. Right. So here we know already long run is the time period where all the variable can be changed without a limitation. So all inputs are variable. So all costs are variable in the long run. There is no fixed cost. So every cost are variable cost. Understood? So if we take the long run cost function, we have only one type, variable cost, no fixed cost. And also the firm has no restrictions. They can expand the scale of the firm or the size of the firm, right? So if we draw it, it's something like this. Right. So here you can see the long run total cost, how it functions, and how the long run marginal cost and long run average cost are there, right? We are going to talk about in detail now about the long run marginal cost. How do we take the long run marginal cost? It's simple. No matter what the cost, if we want to take the marginal cost, we have to differentiate the total cost with respect to the Q, right? So any marginal cost function can be derived when we are differentiating the total cost curve. So to take the long run marginal cost, LMC, we are differentiating the long run total cost. Here. So long run marginal cost means long run total cost change divided by change in Q, or else we can take this by differentiating the long run total cost with respect to. Now then we are going to learn about the long run average cost curve. Here, this long run average cost, or we say LS. So the long run average cost, we say that is an envelope curve. Why we are saying it's an envelope curve? We put something inside, no, or something inside. So similarly, this long run average cost curve is a combination of many short run average costs. Okay, so the long run average cost can be derived by connecting all the short run average cost curves. Understood? So here, when we go to the short run, we know we cannot expand the business. Understood? We cannot expand it. We have to keep the fixed variables fixed. Keeping that fixed variables, we have to change, or we have to do the production. So the scale does not change. Understood? So let's suppose now there is a small firm here in the short run with the MC1 and AC1 curve. Now, even though they want to change the number of quantity that they produce, they cannot because of the fixed item. So if they decide to be here on Q1, they are producing their Q1. So here they can move along somewhere here, but still if they decide, okay, depending on our MC and AC curves, if we are functioning here, so this is their scale in the short run. Okay. So with AC1, they produce Q1. So they will check what are the most suitable or what are the most cost effective AC curve in the short run to produce this Q1. Normally when they decide, depending on in the short run, depending on their capacity, this Q1 is the maximum level they can produce. So then that Q1 is decided. Then they will check whether this Q1 could be produced at a lower cost somewhere. But if they check several short-run AC curves, this is the possible point here. Okay? එතකොට එයාට කරන්න පුළුවන් capacity එකේ Q1 produce කරන්න පුළුවන් නම් එයා ඉන්න short. With keeping the Q1 level here, small scale. Body quantity ප්‍රමාණයක් එයා කරගෙන එයා short run එකේ. Okay? Maybe in another situation, they might function here. If they want to produce Q2, එතකොට එයා Q2 නම් එයාගේ level එක short run එකේ. If they want to go to Q2, but they cannot change the capacity. Keeping the fixed asset and fixed and the variable input, they have to function. So then they have to go to a different ACMC curve. So they have short run AC2 and MC2. Understood? So they will decide, okay, the Q2 output I will produce at this rate. Okay? Then let's say they want to start up with the short run with Q3 output. At short run with Q3 again they will check what is the cost curve available for Q3. Understood? So in the short run, he might go to MC3 and AC3 and will function here. Okay? So in short run, different scales they can do, but they are functioning only at that point. Okay? He will decide I will function at Q1 or Q2 or Q3. Likewise, to get different quantities, they have to face different short run AC curves and MC curves. Did you understand that? So, quantity එක යාට තියෙන fixed input එක යා decide කරනවා. මගේ fixed input එකයි variable input එකතු කරගෙන මම හදනවා with scale ඉන්නවා කියලා he will decide. For that he will face different short run AC and MC curves. Understand? So here long run AC curve means we will combine all these function points of short run curves together, connect all these tangent points, then we get this long run AC. Understood? In long run, there is no requirement that you have to be here at one point. No. Now long run, you can freely adjust your scale and quantity and decide where will you function. Normally, they will go to here, where the minimum point of long run average cost. Right? Long run average cost is point. That is the efficient point for them. But in the short run, it is not necessarily that point. Short run, we have minimum point because they have to meet the market demand. Depending on the market demand, either they will function with the lower AC or higher AC, it depends. Minimum point understood. So simply what you have to remember is LAC curve is an envelope curve with so many short run AC curves, right? So all these AC curves in short run, where it tangent to the long run curve, here we can see these are all these tangency points are connected. Then we get the LAC. Understood? So here in the long run, they will function here with minimizing cost, but it is not necessarily the minimum point from a short run curve. That short run LAC curve එකේ හැම point එකක්ම එයාගේ minimum point එකම නෙමෙයි. Short run is understood? Okay. Right. So that is all you have to learn with long run single, just know. They will in the short run decide different scales, accordingly they will function. So we will observe all these points and we will draw these points together in the long run AC curve. Okay. Then we are going to discuss about the behavior of the long run AC curves. Behavior of the long run AC curves. This is Q. This is long run AC. The curve shape is somewhat like this, no? LAC. Right. Here, can you remember? I told you there are three return to scale: increase in return to scale, constant return to scale, decrease in return to scale. Can you show me this return to scale in this long run average first? In Nampula. No idea? So what is increase in return to scale? Shall we recap on the memory? What is increase in return to scale? What is increase in return to scale? Rate of increase in output is greater than the rate of increase in input. So how about showing that in this LAC, long run average percent? And please don't try to show me may I marker and the Okay, did you show it? Okay, the people who have already marked, can you please read the slide then first? The slide did you hear about? If the slide again, check whether you have marked it correctly. Next. Okay. Yeah. Okay, let's go to the slide. Behavior of LAC is caused by the economies of scale and diseconomies of scale. Okay, so the long run average cost curve behavior happens because of economies of scale and diseconomies of scale. So what is economies of scale? Can you please read? Property resulting per unit costing. Okay, so the economies of scale means average cost of production falls as output expands in long run. Okay, can you tell me economies of scale here? Here, average cost decreasing. The main part is the economies of scale here. Then I asked the question to show the increase in between. So now, this is economies of scale. So then the diseconomies of scale, can you please read again? Property of so the average cost of production rises. So here maybe diseconomies of scale. It should rise. How about this region? It's kind of constant, does not change. So I told you one reason for increase in return to scale is the economies of scale. Scale like a radical put any economy. So savings. Understood? So then where should you show the increase in return to scale? Here, no? Increase in return to scale. So your production, the rate of change in the production increases. Then the change in the input. Economies of scale. Decrease in return to scale, diseconomies of scale. Because of diseconomies of scale, that constant return to scale. So in the same diagram, you can show increase in constant return to scale and also economies and diseconomies of scale. Right. Now let's discuss how this happens. First, economies of scale. So this economies of scale, the name itself explains, when the scale changes, what economies we get. Economics, as a economical can benefit in economical. That is very economical. So these economies of scale can be generated both internally and externally. First, technical economies of scale could be within the firm. What is the meaning? Optimum use of resources in the plant. So that means you are using your machines and labor with an optimal use. That is effectively, efficiently done. Maybe the labor now is specialized. No, it comes under managerial. So technical means all the, like everything, the resources you are using at its maximum productivity. So they generate higher production. Understood? So that is technical economies of scale. What is marketing economies of scale? Can you read? Input, purchases at bulk, discount per unit advertising cost, transportation. So when you expand your scale, then we expand the quantity are increasing, right? So when we are increasing the quantity, here, increase in the quantity, that means we are expanding the scale. So that now we are becoming a huge firm. So maybe now we can get some discounts when we purchase raw material. There are farm, still chutta padukena, but he has to purchase bulk. Bulk purchases and discounts. Maybe at first he might purchase eggs from the farmers in the same village. Now he might go to well-established companies that provide eggs. So bulk purchases. So for that they will get same discounts, right? Similarly, for the advertising also, but if your production expands, per unit cost is now reducing. Like total cost is low. So and also transportation cost as well. So the cost might be a little bit high. But if you are purchasing in bulk, what the transportation benefits then only. Transport providers. Maybe you purchase everything together, then the lorry thing at once. So transportation savings. Likewise, there could be marketing economies of scale. Then what are the financial economies of scale? Borrowings and lower cost. So when you go to the bank to take a loan, what do they ask? Bank loan. No? Not needed. You are very rich. You don't need a loan. They're not considering even. No? How the loan can coming from very rich families, if you not need loan, they say. No, then what? Take a loan to that. No. If you have a forward and if you have a stable income that you can pay proportionately, then you can go for a loan. So when you go to the bank to take a loan, what they ask you? They ask for income, assets, this is called. So because the bank is kind of afraid that you might default the loan. What they want to very either they check whether you have a fixed income source. You better want salary salary. And then they will check whether you have a land for your name, or a house for your name, or a motor vehicle for your name. So they put them at least may not give out and so they try to provide the loan when they are risky is the minimum. People risk averse, risky investment and loan then make sure understood. So for the businesses as well, around loan you go pen and not have a loan because if I'm here third bank, for the businesses also when they are really businesses, what happens? The bank will be kind of skeptical what would be their growth or performance. If they are not well established, then they are kind of afraid to provide you the loan. මේ මනුස්සයාගේ බිස්නස් එක ෆේල් වුණා මොකද කරන්නේ මේ පාමිලි 50කට මනුස්සයාට මේ ලෝන් එක ගෙවන්න පුළුවන් they will check but for the huge companies එයාලා ළඟට ගිහින් අහන්න ලෝන් එකක් විකාරයි සල්ලි ටිකක් දෙන්නද අපේ අරන් ඉන්වෙස්ට් කරන්න that's fine because if they are well established they know the risk is very low so we like to provide so when the scale expanded what happened you can borrow at the low because what is the cost of borrowing? What is borrowing cost? Interest, right? So why they charge an interest? So the interest rate has any care finance accounting people know what is the component inside the interest rate? Risk premium is becoming larger. So they will check what is the risk for them. So what is the well-being human interest rate? The risk if a interest rate medical to charge to cover that risk. So if you are well established, if your scale is higher, then they will lower the burden. I mean, if you then have the scale. So you can make financial economies of scale. And also if you are a big company, which would become a farm even you can register that as a private limited company and open that for the share market. Public. So here, so anyway, the access for the capital market is higher when you are expanding the scale, right? So you can access to capital market, you can borrow at lower cost, and this fourth one, risk-bearing economies of scale, product diversification. So maybe now when you are expanding your scale, you can diversify your business to avoid the risk. For the dairy, he might have some divisions. Likewise, diversify. So that risk diversification. Again, an economies of scale. Then finally, managerial economies of scale. Division of labor and specialization. I told you before. So the managers now, since the scale is bigger, now they have many labors. Now they can assign branches. One of them is sales team. Likewise, the functions of the business could be distributed among the laborers. So the division of labor. Then when there is division of labor, within that division, they are specialized for their tasks. Techniques are we can't make faster. Likewise, they will find the techniques or tips. Likewise, it will ultimately reduce the unit cost. Understood? Right. So these are the economics of scale. Due to that, you can accelerate the production, lower the average cost. Then diseconomies of scale, අනිත් පැත්ත. So when you further expand your quantity, but maybe after one point your cost is going to increase. That means now instead of making economies of scale, now you are making diseconomies of scale. What are the diseconomies of scale? Managerial inefficiencies, coordination issues can be there, right? When you have a huge staff, what happens? Normally in our universities, do you know how many students are there in our university? No, you can. So in my management faculty only, there are more than 5,000 to 6,000 students. For one intake, we take 1,200 students. Intake right? So you can imagine the number of students because the management faculty is the biggest faculty in Jammu. So here the coordination to like we have huge staff managing under the faculty also. That include lecturers, administrators, these laborers, these cleaning staff, drivers, everyone together, right? So the coordination issues are there. When the staff expands, we have to coordinate drama. Then first side meeting but if we have a huge like staff, what happens? Normally now using so let's say now we want to take students for an outbound training, then a period but sort of training, outbound training, training. For that we have to request buses. Do you know how the whole process requires to take that bus approval? No, for example. First we have to get the approval of the head. On the head, මේ දවසට අපි මෙහෙම යනවා බස් එක බස් ඉඳලා අපේ head data okay. Then we have to send that letter to the dean of the faculty. The dean කියනවා management faculty එකේ මෙහෙම then we are sending that to the vice chancellor of the university, the VC. Then after vice chancellor approves that goes to the section is general affairs or something. Or someone not able to leave. So these people have the bus allocation. The leave may have over the person. So we have to call every step and check whether the is there. Because that much traditional setup is there in government universities. Because there is no online or system. So we have to send the letter, hard copy in a book. We call that book a delivery. Okay, the label have a section for the year. Sign okay. So then the people who allocate bus inform us the bus name. Right? So then we have to again check other delays and everything. So you can get the point, no? So this coordination issues. After doing everything and all this thing happened for me, so what happened? We have to send the letter again following all these things. So very happy, no? So at the end, we have to make sure now for not serious purposes, but like all our staff members who involved in all these organizing things, we say we have to take a selfie at every step with the letter now. Because otherwise there is a involvement here. So now we are planning to take a selfie. When our PM takes the letter, we ask him take a selfie with the officer and taking the photo. Then that's the proof when that happens, right? So the coordination issues, the managerial inefficiencies. And also when the staff grows, what happens? Ideal. If there's a small staff in a company, you're bargaining from Now, let's say this class, how about you guys? Only 12 students to 12 or 13. How is your bargaining power? High or low? No. මට ක්ලාස් එකේ මම තව භාගයක් එක්ස්ට්‍රා කරනවා කියලා කිව්වොත් I will do that. Now in that there is small number of students, you don't have much voice, much say in it. මම පන්සියක් විතර ගන්නවා I'm kind of worried. දැන් කිව්වම මම ටැග් ගන්න නේද කියලා මම දැන් already මම කියන්නේ. So same thing happens. So they build up unions. අහලා තියෙනවනේ union එකක් හදලා. Then they protest. Campus වලදී අපි නම් පාවිච්චි කරලා නැහැ. But the non-academic staff ගන්නවා. එදස් යන්නත් ගන්න බෑ. Building argument, keys to cable. අපි ගිහින් ආයෙත් හරිලා. Right? So the union power. So they will bargain. Please increase our salaries. Otherwise, we are going to stop our working until you allow our salary increase, allow our demand. They are going to do a protest. Any other thing? Yeah, you know, we had a dimension sign. So then what? Then they have to take some action. So managerial inefficiencies. In a bakery also, when you have like large number of laborers working, disputes can be happened between the so I can we can do a classroom experiment. Sometimes even lecturers can create disputes within the class. So I very funny things happen. So when we are setting a tutorial class, we wanted to check the time. We have to ask the students at what time slot you like to have this lecture. Okay? So thereby we have to decide, okay, during this period we are going to have the tutorial. Then that small thing causes a huge problem in the class. Any idea how? Okay. So there was two groups because I believe some group decided or suggested to have the class on Friday evening, 5 to 8. Then there are some group of people who are coming to the university from boarding houses and hostels that they are planning to go home by Friday. They do not like it. They request the tutorial class on Thursday. But the people who are like living in close areas, the Colombo people, they like to have it on. It made a huge like split in the class. Friday. So even this, when the number of people are higher, this type of inefficiencies. And engineering. So as lecturers, then we realize, okay, the students are going to be very kind of upset with each other. If they are to continue the classroom Thursday or Friday, then what we did. Like we had a session schedule, some sessions like Marvel. One day we have on Thursday, the other day on Friday. Likewise, we have to arrange it internally because we realize otherwise students are going to be like 4 friends. Understood? So, labor inefficiencies could be there. But when they will like if the number of people are low. Now here in your class, I can notice if someone is sleeping, if someone is yawning. But when on then I will point and I will do something. So they know I can see all the faces clearly. So you are also kind of reluctant to do that. But here, when we have a large group, one people, his inefficiency might not be reflected. When the scale grows. Environmental factors could be there, right? So like when we expand business, there could be some pollution or some environmental restrictions. Creating unit cost to be increased. And marketing these economies of scale also can happen. There are some discounts only applicable to small scale first. Or if serving small scale, then they are doing. So that benefits could be withdrawn when your scale expanded. Finally, finance is economies of scale. Similarly, sometimes we are giving, even the government gives incentives for small scale firms, and sometimes banks give low rate for small scale or SME developer and then you the scale. Understood? So these are the reasons for diseconomies of scale and happen internally and externally, which cause unit cost to increase in the long run. So it will create the decrease in return to scale. Understood? Now we are going to talk about the profit maximizing. Now we know the production, we know the cost. Now how about the profit? So the ulterior motive of any firm is to maximize the profit. So how do they maximize the profit? For that, we have to compare the nature of the cost and the revenue. Because we know profit is equal to total revenue minus total cost. So we have to check the nature or the behavior of the total revenue and total cost curves in order to maximize our profit. So the revenue function is generally assumed to be given in both short run and long run. The cost function is not the same in the short run and long. Understood? So how do we calculate total revenue number? What is the equation for total revenue? Price into quantity. So normally this is a given in short run and long run. Pricing maybe does not change whether it is short run or long run because it is determined by the market. Market again decide when we make a price here demand supply and so that price would be taken and supply the quantity. So the normally total revenue we say it does not deviate much between short run and long run. But now we know cost is going to be very different in short run and long run. In short run, we have two types of cost, fixed and variable, but in the long run, we have only a variable cost. So the short run cost function is different from that of long run because in the short run, some input capital are held constant while all factors are variable in the long run. Right. Then, how do we get the total profit? Now we know total revenue is P minus Q. So to get the profit, we have to take the total revenue minus the total cost. So P into Q minus total cost, we get the total profit. Now we have to maximize that total profit. So there are two approaches that we can use to find at what level or at what quantity this profit is maximized. Whether at what level. So we can follow two approaches, total approach and marginal approach. Okay. So we are going to talk about these two approaches one by one. First, total approach. Here in the total approach, what we do first, we are getting the profit. Profit function. Okay. Then we check at what level this profit is maximized. For an example, if we take this diagram, here you can see the total revenue and total cost. Okay. Now, under total approach, we are considering the profit, right? So the profit equals to total revenue minus total cost. Here we have total revenue, here we have total cost. Okay? So the gap between these two is the profit or loss. If we compare this region, what do we have? It's a loss, right? Because the total cost is greater than the total revenue. Here, profit, because total cost is less than the total revenue. Now that means we have to consider this region. Then we have to find at what quantity this profit is maximized. So here, in this region, the highest vertical distance is the highest point where the profit is maximized. So we have to check at what point we are getting the highest one. So let's suppose it's happened here. That means here is the point where the profit is maximized. So this gap is showing here. Negative profit negative below zero. So then when it becomes a positive, it reaches here. So the maximum point here is equals to the where the gap between the distance is highest. So that is the point where the profit is maximized. Understood? So under total approach, what we do, we have to first find the profit function. Then we have to find where this profit is maximized. For that, what we do, this is the first step. Second step, we differentiate the profit with respect to Q. Why? ඒ කියන්නේ අපි මේ profit function එකේ slope එක ගන්න. If we are differentiate one that. Understood? And this should be equal to 0. එතනදි තමයි අපි කියන්නේ profit එක maximize වෙනවා. Why? Here you can see at this profit maximum point, slope is 0. So that's why we are taking first the profit function, then we differentiate and get the slope equal to 0. එතකොට අපි කියනවා එතන තමයි profit එක maximum. But there is a problem. To solve that problem, we have to go to the third step. Why? If we take here also the slope is 0. Then slope is 0. But is it the maximum point? No. It's a negative. Minimum point. The loss set at the maximum value, not the profit. Then we have to make sure this point is not here, but here. Here we have to make sure. For that, what we do, we have to take the second derivative of the profit function with respect to Q and make sure it is a negative value. එතකොට මේක ආය පාර differentiate කරලා එන එක negative විදිහට ගන්නවා. Why? Because if it's negative, that means එතනින් drop එකක් එනවා කියන්නේ. අඩු වෙනවා. Negative slope එකක් ඊට පස්සේ එනවා කියන්නේ. මෙයාගේ slope එක කියන්නේ මෙයාගේ ආය slope එක. එතකොට එයා negative වෙනවා කියන්නේ එයා drop වෙනවා. Positive වෙනවා කියන්නේ ආය වැඩි වෙනවා. දැන් මෙතන ඉඳලා. If this becomes negative, here. Understood? So that is how we do the profit maximization under total approach. Here, first order condition, second order condition. This is the first order condition, derivative. This is the second order condition, second derivative. Can you please note down that? Okay, right. Now we are going to check the second approach, which is the marginal approach. What is marginal approach? Instead of getting this profit function, what do we do? We are getting marginal revenue by marginal cost. Okay. So the condition is marginal revenue should be equal to marginal cost. This is where the profit maximum happens. See, it's kind of like this. දැන් අපි මෙයාව අරගෙන මෙයාව differentiate කරනවා. Instead of that, we differentiate total revenue and get the marginal revenue. We differentiate total cost and get the marginal cost. Here we know this. Then the slope of or the first derivative of profit function should be equals to 0. So 0 MR minus MC. Then MR equal MC should have. Same way, but a different approach. Taking marginal revenue and marginal cost. But there is a second condition for that. What? Here you can see marginal revenue should be equal to marginal cost. This is happened here. But at that point, the slope of the marginal cost should be greater than the slope of the marginal revenue. What does it mean? මෙයාගේ slope එක මෙයාගේ slope එකට වඩා වැඩි වෙනවා. Here what is the slope of marginal revenue? Then අපිට තියෙන horizontal line එක. Then what is the slope? 0. This is a positive slope. So here at this point we can observe slope of MC is greater than MR, then okay. Then why it is a condition? Because if we consider the cost curves, this is MR, this is MC. Let's forget the AC for the movement. Both points we have MR and MC. Then again, similarly like this, we have a confusion. And both points, the first condition holds, then what is the decision? That's why we impose the second condition where the slope of the marginal cost should be greater than the slope of the marginal revenue. Why? If we compare here, we have a negative slope here. This is 0. That means the marginal cost slope is less than the slope of the marginal revenue. So we engineer pointing now it should be somewhere here. Okay, that is why we have the second condition. Okay, now do these two questions. What you have to do, you have to find the profit maximum quantity and the profit. Done? For the first one, take the marginal approach, okay? Business of ours. But the formula is me. It's a regular. It's not coloring the Okay. Right. So following the marginal approach, what we have to do first? We have to take the marginal revenue. So what is marginal revenue? 100 minus 2x. Okay. So then we have to differentiate the total cost to get the marginal cost. So it's p to the x squared minus 57x. Okay. Right. So to profit maximization condition, MR should be equal to MC. So let's say MC equal to 3x squared minus 57x should be equal to 100 minus 2x. So how do we solve that? We are taking all these parts to left side. Then 3x squared minus 57x minus 100 plus 2x equal 0. So 3x squared minus 55x minus 100 we have 0. Now we have to solve this to get a value for x. Solve the value. Yes. Okay. Correct. What are the values? X equals. Here x value. Yeah. One. So next how? One. Now this is a quadratic function. X squared the complete. How do we find values? Factorization you have to find factorization method. Yes, no. Now here we have some expression like this 3x squared minus 55x minus 100. Now what is the easiest way you have to do? First, you multiply these two together. Then it's minus 300. No? Then we have the scale. Okay, the first step, A, B, C. You multiply A and C first. Then you get minus 300. Then what you have to do? You have to find two terms or two numbers where it gives you the 300 minus 300, but summation of these two should give the minus 55. Then B and node, about terms එකක් වැඩි වෙලා මේ ගාන එන්නත් ඕනේ. Understood? You remember? I don't know how to teach maths. Different. So what are the questions? Second step. 300 and 16 to 5. එතකොට අපි ගත්තොත් minus 16 to plus 5, we get minus 300. And if we minus 60 plus 5, we get minus 55 as well. So the third step we found. Then we rewrite this 3x squared minus 60x plus 5x minus 100. Okay. Then we simplify. Simplify කරගන්නවා. But when we are simplifying, we have to make sure if we take the common factors out, within brackets we should get the same thing for both of the expressions. Understood? Other thing have to Okay. If we get 3x out and then we have x minus 20. Here if we get 5 out, then we have x minus 20. This should become plus. So the factors are 3x plus 5 and x minus 20. Okay. This equals to 0. So if we simplify, 3x plus 5 equals 0 or x minus 20 equals 0. If you simplify this one, this get x equals minus 5 divided by 3. Here this one, x equals 20. And then, so x cannot be a minus value. Profit maximum and minus quantity. Then we are going ahead with x equals 20. Then you are supposed to, can we like finish here? Now we find the quantity, okay. What is the second thing? We have to make sure the slope of the upper side down. Now the second condition. Now the first condition, okay, we found x equals 20. Now we have to make sure the slope of MC is greater than the slope of MR. So here we found these two. Then we have to make sure the slope of MC is greater than the slope of MR. So to get the slope of MR, we are differentiating this again. MR get first derivative. Or else you can rewrite the same thing. B. Second. So here it is minus 2. Then MC 6x minus 57. Now we know x is 20. So we substitute 20 here. Minus 57. This is a Panasatanian here. How much? Huh? 63. So here you can see 63 is greater than minus 2. So the second condition also for the slope of MR is greater, slope of MC is greater than slope of MR. So this is the profit maximizing quantity. We experiment with characteristics. It is I will explain it again. X.
These are experiment.
You have to differentiate this entire expression with respect to x. So if you differentiate this, what happens? 3 into 2, 6x minus main x nothing minus 57. In economics question, you have all issues with mathematics. You don't know how to differentiate. That's the issue. Now, okay. If you cannot see the board properly in the back, please come forward. This is for that. Dominic, done? No, not doing it. Is it allowed? If you cannot do this factorization, there is a formula also, multiple factors there. A minus A plus B to the root something we equation में करते हैं ना एक बात क्या है I don't know how to teach that. Okay, I'm not a maths teacher. I'm also very poor in maths. And here in the first question, you are supposed to find the maximum profit also. How much profit is there? Maximum profit. Then 20 කියලා ගන්නවනම් ඒක substitute කරලා ගන්න TR minus TC වලට 20 දාලා value එක ගත්තාම profit එක එනවා. It's confusing. Are you okay? If you have a question, just let me know, okay? So this part you have to be like very thorough. Shall I use the board? Okay. So you have to get the differentiation is linear. And you have one slow very fast, one slow just coming in. Yes, design is two ways, because we have made that before and it's like something else. That's kind of true. Okay, one is slow. It means we can solve with that their idea. And they have very good idea. It's minus as what all it says 6x 6x minus 50x. And then you can experiment between 10 minus 1 to the beginning of the x equal to okay? It is equivalent to maybe the circle, but another power x. X in it can be a pin. It can be a sign with a expect it can be good. Yeah, it will be a minus which is without creating over. To do some calculation or example is the why then this is the law of the imbalance, law of the marginals. Oh, because for the equivalent makes a capital and then may then when you got to other point and pay point. This no this එතනදී MRNC කරන්නේ කම්ප්ලීට් එක කරනවා තමයි දෙන්නේ. This one. මේකේ අපිට දැන් බලන්න ඕනේ MRNC මෙතනද වෙන්නේ මෙයා උඩට ගිහින් මෙතනක් කැපුවොත් මෙතනද වෙන්නේ. Then comparing these 2 points. That's why we specify MC's log should be greater than the MR's log. එහෙනම් මෙතනින් එහාට යනකොට ඒක වෙනවා කියන්න පින්නේ මෙතන. Understood? No? Okay. Let me explain it again. So please listen, okay? Marginal approach. First step, we are taking the first derivative of the total revenue, which is MR. Second step, the first derivative of total cost, which is MC. Okay. Third step, MR should be equal to MC. Then we find the X. Understood? Then, fourth step, we have to make sure slope of MC is greater than slope of MR. How do we get the slope? Slope again, to get the slope of one function, we have to differentiate the function. Slope. So we already found the MC. We have to differentiate MC with respect to Q only. It's about the slope of MC. Understood? That's the name MC dash. Okay. Then to get the slope of MR, we differentiate MR with respect to Q. Then we get the slope of MR. That is a maximum point. Why this is a condition? Now here this is Q. This is MR MC. Now we are assuming our MR is fixed. Perfect competitive firm MR and but if it's other type, it's a downward sloping. But for the simplicity of MR and horizontal line. So this is our MR. This is our MC. The profit maximum condition is MR equal MC. So here also that happens. MR equal MC. Here also that happens. MR equal MC. Now we have to decide, may I the Q profit maximum or this one? Which one? The second condition is for that decision. Understood? May I. So the condition is the slope of MC should be greater than the slope of MR. What is slope of MR here? 0. Slope of MR 0. This is a positive slope. Positive slope. So positive value is greater than 0. Again, measuring point again. Where the slope is value. That means we are here. That means this is where the profit is maximum. But if we compare this point, may slope negative value. Where 0. It's a count of 2. 0 is greater than negative. That. Understood? So that is why we are checking, taking MRNC, equality and find the X. But we cannot conclude there. We have to go to the second step. Make sure we are at the right point. At the middle. Minimum and maximum. So the slope of MC and slope of MR. May I greater than? That's what we did. There are minus had to do minus the guy compare slope. Slope excellent. So I am this level. Okay. How about question 2? Another? Do you want me to discuss it also? Yes? Place it. Yes. No. So this is very funny with your generation. You always take photos, no? So are you sure you are like writing it later in the note? Can you promise? No. Then what happened? Then you are like checking the note. So this part is nowhere in the book. Are you like cross-referred to your photo gallery? Gallery के मेरा सिर्फ मे photo ना पे बालने के अलावा कुछ नहीं है. You cannot find. So later, when your memory is not enough in the phone, what becomes very good? And board पे आने वाले का board photos से those are the photos simply erase at first. Right? It's okay for me if you want to take photos, take any photo of the board, but the reality is later you might not get. Please write it down in the note at least. To remind you again, next week we are going to have the quiz. At the moment, I'm thinking of that. Okay, one minute, my time plan unless there is a difference. So I will inform you via LMS, so make sure you attend the lectures next week. I will check and let you know whether it's going to be a paper-based quiz or LMS. Most probably, I think it has to be on the printed version. Okay, at the online LMS something like that. If it's a printed version, it's not an MCQ. Rather than I don't mention. No, still then you can check all the notes, phone and everything and do and take 100%. Huh? But still then you can, I cannot check whether you are putting notes or not. Whether in the class quiz phone. No, the phone again, phone with I will be saying it's not. This is the first time I'm doing this course. I do not pass them. This don't worry, just refer the slides. I will upload these two slides also today. Just refer the slide, practice the question. That's it. Then put an ever again, keep up the Shall I rest now? The second one, you have been given the market price is 50. The total cost is 100 plus 10 q minus q square minus not plus q square. Right? So you are supposed to find at what level of output the firm will maximize profit. Shall we follow here the total approach? This is the first question, we did the marginal approach. Let's do the total approach. For that first, we have to find the total revenue. Total revenue equals P into Q. P is 50. So total revenue is 50 Q. Then secondly, total cost has been given 100 plus 10 Q plus Q square. Then thirdly, you have to find the profit. Profit equal total revenue minus total cost. 50 Q minus so ultimately you will get something like minus q squared minus 4 plus 40q minus 20q. Yes? I make the differentiate. That is easy, I think. Or this is also the same. This minus q. Yes. So now we have profit function. Now what we have to do? We have to take the first derivative. That means the slope of the profit, then equal it to 0. So we are the fourth step. We are differentiating the profit function with respect to q. Then we get minus 2q plus 40, right? Then this should be equal at the profit function. So 2q minus 2q should be equal minus 40. Q should be equal 20. Yes. But the fifth step, we have to make sure this is a maximum point. So we are getting the second derivative here. Second derivative. Then we get minus 2, which is less than 0. Negative can they are unwritten. So that means they are in the maximum. So it's all right. Okay. So how do we find the total profit made by it in the equilibrium situation? The profit function here. This one, may I substitute 20. 20 and then here into 20 minus 20 squared, dating by what? 20. How much? 300. 300. I did not calculate, okay? Right. So with that, we finish that. And we are going to start the other session, which is session 4. Perfect. Now here, I will remind you the flow. Do you need water break? Okay. Just stay 5 minutes break. Can you all mark the attendance as well? If you cannot mark it, I will manually do. Okay. Great. If we cannot do it, come, I will do that. That is easy, and it is said that your generation is very like expert in technology, but still cannot scan a QR and mark your attendance. My goodness. Okay. Number. Number. Your here, huh?
22.
Here, this one.
Yes.
Okay.
He can take 70. 20.
Yeah. Okay. Now we have done discussing cost and production. Now all these firms we take it as like generally we take a firm and we examine how their production function behave and how their cost curves behave in short run and long run. But the problem is when we go to the market or in the real economy, we check, we can see firm to firm the nature or their behavior is totally different, right? So the firms are not identical. Within of the market, within of all firms or companies or producers are they same? No. So totally based on behavior, their posters, their profit maximization, how they maximize their profit and everything. What we do, we categorize them. We categorize these firms into different market structures. Okay? So depending on the market structure, we say how this is going to be function within that structure. So there are several market structures that mean different markets. So we are going to examine market by market how the firms within that market structure behave. So we are starting with the perfect competition. That is the first market structure we are going to discuss. Market structure is the perfect competition. So we will discuss all these parts today. So the introduction. A perfect competitive market is one in which there is a large number of buyers and sellers of a homogeneous product, and neither a seller nor a buyer has any control on the price of the product. That means this perfect competition, as the name itself explains, they are competing perfectly. They are with fair competition. So all businesses, here producers or consumers, they do not have any power over the price. Sometimes what happens when we go to the market, what happens? Sometimes producers might have different prices depending on the consumer. Sometimes people do, they pass the shop, park the car and go to the shop. Why? Because they know if they see a car, they think, okay, these people can pay a higher price, so I will I will charge a higher price, likewise. So that happens. And sometimes what happens in the market, anyone to despair, Sunday prayer, Wednesday prayer. Yes. So sometimes have you seen some aunties or some even uncles even? Well, sometimes some young generation too. They demand, they bargain price, everything. We can not see it. Especially if you go to this Peta market, that happens in Peta market, how kilo price the vendors also know how much what price it goes up there. They also sometimes say a high price. Here at the price of sometimes the price is 1,000. We buy it for 500 sometimes, right? Because of the bargaining power. So the consumers bargain, producers also can demand. Likewise, the price can be changed, but not in this market structure. We assume in this market structure, the price is no control for buyer or seller. Seller venas karanne, buyer venas karanne. Because it's a perfectly controlled. positive parameter. How the price is going to price is given. For that price, the consumers are willing to buy and producers are willing to supply. Understood? Right. And the product we say it's a homogeneous product. What is a homogeneous product? Same or identical product. Again, if we take all the firms that supply this product is same. So packaging එකේවත් quality එකේවත් taste එකේවත් කිසිම දෙයක්. වෙනස් එකේවත් වෙනසක් නැහැ. මේ කඩේ තියෙන එකමයි අනිත් කඩේ. කොයි කඩෙන් ගත්තත් it's the same. So they can perfectly compete because there is no difference in the product. Price එකේ difference එකක් නැහැ. product එකේ difference එකක් නැහැ. මොන කඩේ තිබුණාද මොකද? Can you give example for such market? Examples take the market. Homogeneous product එකක් වෙන්නත් ඕනේ. price එකත් එකම වෙන්න ඕනේ. seller ට buyer ට seen bargain power එකක් තියෙන්නත් බෑ. So we can give some examples. Cigarette. No. Homogeneous product. Okay. Eggs. But sometimes in eggs, don't we see differences? Identical eggs කියන ඒ විතරේ මාර්කට් එකේ අනිත් කඩේට ඒ සයිස් ඒ පාට විතරක් So let red eggs, brown eggs, white eggs, then gum විතර තියෙනවා, palm විතර තියෙනවා. And sometimes they promoting ඒක ප්‍රොමෝට් කරන්නේ අපේ විතර අපි කිකිලියන්ට කන්න දෙන්නේ මේවා ඒ නිසා අපේ විතර මෙහෙමයි කියලා ගාන වැඩි. So and also sometimes we can do bargaining also. Okay. So can we say exactly? But the cigarette sounds different. Huh? Cigarette bargain කරන්න. Then you guys like why? You cannot bargain. You have to purchase it at whatever the price. Fixed price. And the product is also identical. But one thing, if we take the cigarette, there are some classes of cigarette එකේ තියෙනවා නේද? Premium brand තියෙනවා. ඒක දැන් අග පාරකට ඒක example එකක් විදිහට bargain කරන්න කියලා. Now we don't know. Thank you. Sugar. But still sometimes there are discount there when the price to the feeling with the kills a price car is a price of no? Where are they? See what we price to get the 4 weeks in the huh? Come make 100 and 90 point of make our Liquor. This product I mean, then the brand they have gave here, but if we take liquor, it should be same product. They are packaging will have some paint and some have some have a commodity basket, no packaging, what do they say on that? But that would be different, like how they open, then they didn't hear us maybe see. But still, maybe how they sell can be different. AC කරලා කොහොමද ඒක පොඩි එජ් එකක් charge කරන්නේ නැද්ද price වලට? We mean utility. Have put it in a
Bus fares.
bus. People definitely. Service also can be different. Bus के bus के एक में seat पे एक में that we have No, some have like large cassette and CD players. Some are like very carefully driving, some are not. Some conductors are good, some are not. Homogeneous reverse. Rice, I know. Rice. Okay, rice. It's similar. Like, don't you have some bargaining power over rice? Then, एक කඩවල එක ගාන යන්න කිලෝකට නැද්ද? පොඩි වෙනසක් දෙන්නේ නැද්ද? දෙන්නේම නැහැ. Are you sure? Same price. ලංකාවේ හැමතැනම 250 කිලෝක 250 no discounts, no packaging differences, no quality differences. එකම high quality දෙකක් දෙන්නේ නැද්ද? Exactly. What did you say? Yes. This perfect competition is extreme market structure. Okay? So it's a rare phenomenon. That's what I wanted to prove. But your examples are very good. Even I was confused. But here, perfect competition. We say, even though this market structure is teach to you when we say that this type of market is there, but generally this is not a realistic market structure because any firm cannot like compete perfectly. එහෙම කල්පනා ගියා හැටිද යාකට එකම ප්‍රයිස් එකකට නම් යාට විකුණන්නත් වෙනවා. එහෙම differentiation එකක් කරන්නත් බැහැ. He has to bear the same cost, same profit, no motivation to stay. Don't you get that? Producer හැමලේ බලන්න profit maximum කරන්න. So and also we say in this market the perfect information should be also there. Perfectly compete කරන්න perfect information to be. Why? So I, as the buyer, know all the information about the seller. Seller to make the cost making and the margin then put a price and one. And also the sellers also know all the information about the buyer. Buyer is coming up, buyer is family background, they are then willingness to buy the seller. So they know perfect information, that's why they get perfectly complete in this market. Can this be a community? එහෙම වෙන්නේ නැහැ. අපි දන්නේ නැහැ සෙලර් ගෙනම් කියලා වුණත් අරින් ගෙනම් හිගෙනම් කොල අපි දන්නේ නැහැ කට්ටිය. සෙලර් දන්නේ නැහැ අපි ගෙන. අපි කාර්යක්‍රම අතර පයින් නෝබ කියන්නේ එයා දන්නේ very fast. So this market is a rare phenomenon we say. So it's an extreme end, not very realistic, but there are some close examples like you said eggs, rice, these vegetables. අපි ගන්න example vegetable competition එකේ. But still, there is no such product called homogeneous. Homogeneous product, even for liquor and cigarette, the experience that the consumer get might be different from place to place. මොකක්ද කාර්යයේ section එකයි කීයසේ section එකයි එළියේ මයින් ස්ටෝර් එකේ කෝඩින් එක ඉඳලා ගන්න experience wise is different. Somewhat differences there. ඒකව product එක කවුරුත් වෙනස් වෙනවා. සමහරවිට පිළිත් වේ සමහරවිට පාත්‍ර වල කොටලා දෙන්නේ. Likewise. Homogeneous product කියන එක very rare. At least by experience that the consumer feel in purchasing process, the product can be different. Understood? Product is not the final product. For the product, THC in all other attributes, quality, and everything matters. And then it's a homogeneous. Understood? So we say this is a rare phenomenon. But you guys are very good. You like very rationally and logically argue. I like that. Then what are the features of this perfect competition? Features. The first one is a large number of buyers and sellers. This market is a big market. There should be large number of buyers and large number of sellers. Understood? Product homogeneous. The product should be identical. Free entry and exit of course. That means For that particular firm, the particular market, anybody can enter, anybody can leave. No restrictions, no government intervention. Rules, regulations, and maybe register maybe what the matter didn't know. But if you think about that, let's say this Victor is perfect X in the perfect competitive market. If I just think, okay, I want to be a exceller, I can. If I just say, no, I don't want to continue this business, I can be. Simple as that. Free and get free exit. Then no government information. Perfect mobility of factors of production. But free entry and free exit means what? I can freely come to this market to be a producer. That means all the factors of production that I have can freely come to the market. If I decide, oh, I'm going to exit and I'm going to another market, freely I can move the factors of production as well. Available, actually, so the free flow of factors of production. Perfect mobility, we say. Then perfect knowledge of buyers and sellers. So the buyers know entirely about their sellers and sellers know every information about the buyer. So that's why this market is a perfect one. This is not a reality, but this is a very good structure for us to set the guidelines, set the foundation, and understand the basic principle of a market. Okay? Why the firm's demand curve is horizontal? Now, if we consider this firm, they have a horizontal. Normally, if we talk about demand, what should be the shape? Downward sloping demand curve, normally there is an inverse relationship between price and quantity demanded. But for this firm, we say the demand curve is horizontal. So if we draw the demand curve, it's something like this. Q, P, it goes like this. What does it mean? That means the price is fixed. At any price, the consumers can demand any quantity. Okay? As a price, consumers can decide how much to buy. Understood? So the price or the demand curve is a horizontal one because therefore firms are likely to be price takers. They are taking the price, whatever decided in the market. We are talking about individual firm. Individual firm is a price taker. So they have some or all of the following four properties. Right? Now we have these firms face a horizontal demand because they are price takers. Market decide the price supply. The consumer price demand. And here, all firms in the market sell identical products, freely enter and exit, know the prices charged by the firms, transaction costs are low. Because if there is a huge transaction cost, what happens? Then can we have a firm like fixed price? After gain cost transaction, then we assume transaction cost does not mean all the costs related to transporting. The other one also like for the bank charges, all other expenses, this transaction cost, transaction cost. So if the cost is higher, these are the price. Price might be different. So we assume transaction cost is very low. Therefore, the price is not going to be the same as this market. So a demand curve for an individual firm happens. This is the market. Market means here all the firms together, market. And all the consumers together, their demand like is consistent to the demand theory. Downward sloping demand, upward sloping supply, market again. That means if we take X, egg market, if we add all the consumers in the egg market and all the producers in the egg market, they have normal demand and supply. That is where their price is determined. A market the price is determined. Then, if we consider individual firm, what they do, they take that price take, a price taker. At this price, they can supply whatever the amount they like. They are put one amount they go to supply. For a firm, what is their demand? This horizontal line equals to their price. Okay, the consumer the consumer knows what's the price determined the market. With the label මේ market එකේ මෙච්චරයි යන්නේ කියලා consumer දාන්න. Consumer ඇවිල්ලා order ගන්න ඒ price එකට දෙන්නේ. So the price is fixed, they can decide the quantity. So the demand curve is okay. Now we are going to talk about how in the short run these perfectly competitive firms comes to the equilibrium. Now we learned beforehand how the firms are coming to the equilibrium. Profit maximum වෙන්නේ කොහොමද කියලා අපි හොයාගත්ත total approach and marginal approach. Similarly, we are going to find here for the perfectly competitive firms how they maximize their profit, or if there is a loss, how they minimize the loss and come to the equilibrium in the short run. Okay, so the two approaches are total approach and marginal approach. So under total approach, the same thing that we learned, profit equals total revenue minus total cost. These things we already discussed. When the vertical gap is maximized, that is where the profit is maximized. So we have to find that point. For that we want to find the profit function. Then take the slope equals into slope the 0. Then find the quantity and double check whether the second derivative is negative to make sure it's a maximum point. In the marginal approach, this is little bit important for perfectly competitive firm. Why? For the perfectly competitive firms, we know they have to take the price as it is. P is fixed. They are price fixed. Then, what is their marginal? Normally, what do we say marginal revenue is? මොකක්ද marginal revenue එකක් කියලා අපි කියන්නේ normally? Then we sell one more product. What is the addition to the total revenue? එතකොට අපි addition එක වෙන්නේ කොච්චරද? දැන් හිතන්න මම එක පාන් විදියක් විකුණනවා. මට February එකක් හම්බ. මේක කරනකොට පාන් විදිය. තව එකක වැඩි කරනකොට මට තව add වෙන්නේ කොච්චරද? Which is equals to the price of the trade. පාන් විදිය වලට සමාන ටිකක් තමයි add වෙන්නේ. Now, can this addition be different for perfectly competitive firms? No, because they have horizontal demand. කොච්චර විකුණුවා price එක දාන්න තමයි අපේ work වෙන්නේ. මොකද downward sloping එකක් නෙමෙයි තියෙන්නේ. demand එක වැඩි වුණා කියලා price එක වැඩි කරලා marginal revenue වැඩි කරන්න බෑ. Because of that, for the perfectly competitive firms, the marginal revenue equals to tax. Only for perfectly competitive firm. So under marginal approach, the profit maximum condition is MR should be equal to MC, but for perfectly competitive firms, we say P should be equal to MC. And the second condition is still the same. Slope of MC should be greater than the slope of M. MR cannot be moved after P cannot below. Because for the perfectly competitive firm, P equals MR equals demand. Now, how do they determine? If we look at here, This is their demand curve or marginal revenue. Average revenue is also the same. It does not matter. So horizontal line. This is their average cost. This is their marginal cost. So this is the point where marginal cost equal to marginal revenue. So Q is the equilibrium. At that point, we know, and also the slope of marginal cost is greater than the slope of marginal revenue at that point. And if we compare what is the cost here, when we make Q and the cost here we have, right? The cost, average cost. So this is the cost, this is the price. And a cost higher price then this entire region is our abnormal profit or super profit. Cost low price so that difference is abnormal profit for us. Okay, can you please draw this? Okay. So now, by looking at the diagram now you just draw, we are going to check how they decide the profit maximum. Okay. If MC is greater than MR, OP, C to 5 also. No? MC is greater than MR. That means here, MC greater than MR. Then what we do? Total, sorry, the other. MC is less than MR. Here, MC is less than MR. So the total profit is increasing and it pays the firm to expand its production. If our marginal revenue is greater than marginal cost means we are having addition of more revenue compared to the addition of cost. Then you will be motivated to produce more. So you are like if you are here, somewhere here your production, this is your marginal revenue, this is the cost. All this is profit. So you will be motivated to produce more. So you are going there, right? And if your marginal cost is greater than marginal revenue, then total profit is reducing. You are incurring a loss. If your marginal quantity का decide करो, your marginal cost is here, marginal revenue is here. So you are making a loss. If you produce more, that means the addition of revenue is less than the addition of cost. So you will not be motivated to produce. You will go here. Likewise, ultimately you are reaching here where MI equal MC happen. This is where your profit is maximized. So the first condition for the equilibrium of the firm is that the marginal cost should be equal to the marginal revenue. MC MR වලට සමාන වෙන්න ඕන. However, this condition is not sufficient since it may be fulfilled and yet the firm may not be in equilibrium. මොකද මෙතන here. Then profit එක maximum වෙනවද? No. But MR and MC is equal, but you are making little bit profit. If you increase the production, you can make higher profit. So that is not the only condition. You have to make sure the slope condition as well. Here, both these two conditions should be whole if you are to maximize the profit in the short run for a perfectly competitive firm. Now here, this is the market. In the market, the demand and supply is there. There you determine the price. That price is taken for the firm. Okay? එතනින් තමයි price curve එක එන්නේ. Now, if your average cost is well below the price, that means you are making abnormal profit. Understood? But if your average cost is same as the price here, average cost එක මෙතන price එකට සමාන. Then how about the abnormal profit? We do not have abnormal profit, rather we are making a normal profit. ඒ කියන්නේ price එක ඇතුළේ තියෙන පොඩි profit portion එක විතරයි එන්නේ. Super profit එකක් එන්නේ නැහැ. If your average cost is greater than the price, then what happened? You are making a loss. So please draw these four diagrams together. Maybe you can use your books. Landscape version and roads and company. Okay. Okay. Now, here, the firms have to decide at what point to shut down their business, right? Then if they are making losses, especially they have to think whether to exit the market or to operate further. So this firm shutdown decision, now we are going to talk. How these firms decide at what point they have to shut down. Exit when the market takes on a point. For that, they are asking two questions, or they are considering two things. First one, the firm shutdowns only if it can reduce its loss by doing so. That means if the firm is considering to shut down, means they are already making a loss. Now they check whether this loss could be avoided only by shutting down. Then if that's the case, they have shut. කොච්චර කරලා මේ loss එක recover කරන්න බැරි නම් පහන එක නම් එකම option එක then they have to use. Secondly, the firm shuts down only if its revenue is less than its avoidable cost. That means there are some costs that have been already incurred. දාපු cost ටිකක් තියෙනවා. ඒ ටික දැන් ගහුවා කියලා අයින් වෙන්නේ. Already those are unavoidable costs. දාලා level some costs. So then they check whether at least their revenue could be covered unavoidable. දාන්න බැරි දෙයක්. බලන්න ගන්න පුළුවන් cost ටික හරි දාන්න පුළුවන් revenue එකක් කෙනවද කියලා බලන්න. එහෙමත් නැත්නම් they consider to shut down. So we will discuss this further. Consider a shutdown point. First, considering this point. Let's suppose they are here and the price then what is their decision? They are not making any loss or profit, only the normal profit. Then it's okay. No? Now what happens? The price is somewhere here. The price is somewhere here. Then what happens? This is where now this is where their MR and equal MC happen. But at that point, their average cost is high. So they are making a loss. Making a loss. Then MR equal MC when method. So this is the loss. Now they have to decide whether to shut down or not. For that, since this is short run, they will consider out of the total cost. We know there are two types of costs: total fixed cost and total variable. Fixed cost is already come, no? Already incurred. So it doesn't matter whether the price is enough to cover that part. So they consider at least the revenue is enough for them to cover the variable cost. Avoidable cost. Why? Reduce කරේ නැත්නම් avoid කරනවා. ඒ cost එක cover වෙන කාරණේම price එකක් තියෙනවා නම් they will decide to continue their business. Understood? So here, since we are talking about AC equal AFC plus ABC, at least the price should be enough to cover their average variable cost per unit, right? So if there are ABC going somewhere here, then ABC එකට වඩා MR equal NC වෙන තැන ABC දෙයට පල්ලෙහින් නම් they will decide to continue the operation. Here. So let's suppose now the price is further going down. The price again may higher. Then MR equal NC වෙන method. AC higher. So may become a loss. But still there ABC is here. Okay? At least the price is enough to cover their unavoidable cost. Sorry, avoidable cost. Avoidable cost. Now the price is here. Now, what happened? Now the price is equal to their average variable cost. Then that is the where they have to take the decision. Obviously, if the price falls below the average variable cost, is it fruitful to continue the business? No, they cannot at least cover their variable cost. Production cost is what covered by one. Then it doesn't matter, they have to shut down. But at that point, they can either think, make profit there, have a variable cost in the cover them. If they decide to so the shutdown decision comes here at the minimum point of average variable cost. When the price comes to the minimum point of average variable cost, that is where they decide whether to continue or discontinue the business. Shutdown decision. Okay. So please draw down this also. So now we know the individual firm, we are talking about individual firm in the perfectly competitive market. Now we know what is their demand. It's a horizontal line. How about their supply? What's their supply current? Any idea? So the supply curve of the firm is derived by the points of intersection of its MC curve with successive demand curve. That means here we know MR equal MC happen. So he likes to supply that quantity here at this price curve. Okay. So if the price increases up to here, P2, then MR equal MC happen here. So he okay to supply Q2. Likewise, the price can be changed. So they like to supply whatever the amount where the MR equal MC happen here also. And we have to the price. Q0 may provide supply to capital. So you can understand it is on the MC curve. MC curve which is the supply right. Then what is the starting point of the supply curve? So now we know it should be somewhere along the MC curve, but at what point it starts? Hmm? Here. We already discussed what is the shutdown point at the minimum point of ABC. If the price equals to the ABC, that is where they decide whether to supply or not. So the start point should be the minimum of ABC. If your price equals to the minimum of ABC, that is where they decide whether to supply or not. Do they like to supply here? ABC වලට අඩු price එකකට supply කරනවද? No. So this part they do not supply. So the part or the portion that we consider as the supply of this individual firm is where from the ABC minimum point of BC to the pricing part of MC. So this is the supply curve of the individual firm in the perfectly competitive market. Okay. So please draw this also. So here, now you can understand, if the price increases, they like to supply more. So it's an upward sloping supply curve. But if the price falls below the minimum point of the ABC, then they do not like to supply. Okay? So in between, you have the supply of the individual firm. So the MC curve to the right of the shutdown point. Shutdown point again, the rightward, upward, yana MC curve තමයි individual firm එකක supply curve එක වෙන්නේ. Then, if we talk about the short run supply curve of the industry, this is for a firm. How about for the industry? Then we have to add all these MC upward sloping parts of individual firms, and we summation of these horizontal MC curves are the industry supply curve. The exceller connected supply curve excellers supply curve we are getting the market supply curve. Right? So the industry supply curve has a positive slope. Right? So the long run equilibrium we will discuss next day. Okay, I will wind up 10 minutes early since we had 2 lectures in a row. So do you understand the session? Do you have any confusing part? All okay? So for my understanding, you are very poor with differentiation. Please practice that, okay? And I will confirm whether we are going to have the what you call the quiz or not next week. Most probably before Tuesday, I will do the LMS marks. Okay? Time of this.